One thing that has been like a real eye opener as for me over the last year is so I've been writing this book about GameStop and about the saga that's still unfolding.
Hmm.
I don't know if you've seen some of the drama that's happened on Twitter with Ken Griffin lied, was trending, and there was some, yeah. I'll not get
Yeah, I'm
into it.
familiar.
Yeah, but so for me, and I'm not alone in this. I've seen many other people talk about this. Is that I mean, I'd always suspected for a long time that the world was very corrupt, that there was a lot of things being done, should we say, inefficiently. And it wasn't until this year when I was kind of forced to really look at finance and the financial markets that I got a real understanding of just how rigged quite a lot of the economy has become, and that if other people could see this, it would be a big eye opener. And what you've said there is that it's become too complex, it's too much, and people just sort of revert to their own like worldview. Is quite accurate, I think, in that. I mean, I've had the time to sit down and go through it. Like I'm lucky in that sense, but most people don't have the time to sit down and figure out like the inner workings of the U.S. stock market, or how global finance is skimming money off of every industry. Or there's so much complexity there, as you've mentioned. But do you think that's like necessarily the reason for collapse? Because the complexity doesn't put off everyone, and there's, I think, enough human ingenuity out there for us to overcome that complexity, or to manage it, basically. So why do you think that it is that the people with the capabilities to do that haven't risen to the positions where they might be able to affect some sort of change?
That's a good question. So our system, our larger cultural system, it rewards some behaviors and punishes others, just like every currency system rewards some behaviors, punishes others, right? And so I'm a big believer in Charlie Munger's statement that if you show me the incentive, I'll show you the outcome. So we have a system that's heavily incentivized towards, and humans are wonderful at figuring out incentives, right? I mean, if you go to like a supermax prison, nothing comes in or out. Guess what? There's still an economy in there, right? People are buying things, maybe not with currency units, but one way or another, there's an economy. So no matter what the system is, humans will find a way to game it, right? We're wonderfully good at that. And over time, the stock market, to pick one example, has become gamified. And the whole thing, once you really understand the inner workings, and by the way, I've done a lot of interviews with people like Themis trading guys, South Lucy, and those people who talk about high frequency trading. And you mentioned Ken Griffith, and they're a bunch of high frequency traders. And these are just like systems of computers that are geared to shave tiny pieces off of every transaction at the microsecond level, right? In some cases, even nanosecond, because they've got their servers co-located on the floor. So by the time you and I take our fat thumbs and press a buy or a sell button, we are light years, literally, behind what the actual ecosystem of computers can do. But when you strip it all away, every hedge fund does nothing for society. They create not one good, they don't advance one service. They're skimmers. So we have this massive skimming operation. And of course we do, because there's huge amounts of paper promise tickets of currency wealth kicking around there. And you give people an incentive to do very little work and skim a lot of money, they'll do it every single time, right? And so we've actually, my critique of all this begins back with Alan Greenspan in 1987, when we had our first major crash, and he wrote in and just dumped currency all over the place. And then, Wall Street learned their lesson. They're like, wow, if you're going to fail big, because you get a bailout. So you get, this awesome thing. And then in 1994, most people are unaware of this, but there was a pretty decent dislocation in the corporate bond market. Again, Alan Greenspan said, not on my watch. And he wrote in with a very obscure rule. It's totally wonky and geeky, but maybe you and your audience will like this. It was called they changed what's called the sweep rule. So the sweep rule got implemented, which allowed banks, banks are supposed to keep a certain amount of currency in reserve. It's the whole idea that if everybody went to the bank at once, they would find their currency isn't there, right? Because they only have to keep some on reserve. And the reserve ratio was 10%. So if a bank had $100 of your money, they're supposed to keep $10, right? In case you showed up and wanted your money. Yeah. And so that reserve ratio was in forever. And Alan Greenspan said, geez, we have this corporate bond thing. We need banks to be able to lend a lot more money. What can we do? Well, the banks by law were required to keep 10% of your money in reserve in a demand account. That's savings or checking, because you can demand your money right away. So the rule that Alan put in place said, oh, but what if banks at 11:59 at night, they could sweep your money out of that demand account. So when they take the sweep, when they take the reserve snapshot, which they do every night at midnight, when they do that, if your money wasn't in a demand account, but they'd swept it to a time account, which is called the CD. So they swept it into a 2-minute long time account, 11:59 to 12:01. Your money leaves your checking account, goes to this short-term CD. They take the snapshot. There's no money in your account. Now they don't have to keep any money in reserve. Well, that was awesome. It solved a lot of things. They're able to loan a lot more money. Next thing you know, we got the stock bubble, which was the first big tech bubble, right? Along the way, 1998, long-term capital management blows up. Again, Alan Greenspan rides in, saves Wall Street from taking losses. Then 2000 happens, that blows up. And all of these things were, my model for this is, I'm laying out a story, which is the Federal Reserve under Alan Greenspan, they had a little correction steer, right? Which was 1987. And then the things really started to skid. So they had to correct back and they drove the other way. Now we're really fishtailing. That was 1994. They do the sweep account. 2000. And we've just been going back and forth, one oversteer to the next. And then COVID happens. And now I've never seen anything like this. We went from what I thought was horrifying in the great financial crisis, where the Federal Reserve blew out its balance sheet from 800 billion to about 3 trillion. That was just unthinkable, right?
Yeah.
And they've just done 3 trillion in the last couple of years, right? It's just like, now we're at 8.5 trillion. It's just like, it was just exploding. And now they're going to have to oversteer again in the other direction. We all know where this is going. This blows up at some point, and it blows up miserably. And the people who get most hurt are the middle class, even upper middle class, all the way on down. That's just how this game gets played, right? Yeah. But all predictable, all obvious errors, and every step of the way, you show me the incentive, I'll show you the outcome. With the Federal Reserve just dumping money in and all the other world central banks following along, because they kind of have to, you end up with a financialized, gamified, speculative economy that, by the way, if you read Will Durant's books about ancient Athens, you can read paragraphs that sound exactly like today. No different. People would spend their time, instead of figuring out a better mousetrap or how to create more, goods and services, all these beautiful, intelligent people are over here playing games with computers and microseconds and crap, right? But nothing gets created except claims, more and more claims. Eventually, there's a day when all those claims, which are sitting in people's pockets, and people get religion again, and they go, oh, I actually want stuff. And they all try and head for the exits all at once, which is called, I'll trade you my dollars, my pounds, my yen, my whatevers for anything of actual substantive value. And that could be Bitcoin, because they think that's the next way to go, or it could be land, or it could be buildings, or it could be corn or oil. It doesn't matter. But that day's coming. And I submit, as we're talking about this here in early October 2021, it's already started. Just pull up a chart of the commodity research bundle, and we're off to the races.
Yeah, we really are. I get the feeling we're not going to get to half the stuff that I wanted to, but that's fine.
That's kind of how it goes with me. Sorry.
No. This is much better. I like going off the cuff. It tends to seem, it flows better. So the thing that I was thinking about just literally this morning was something that really plays into what you've spoken about here. So are you familiar with the term a bust out, like the private equity do, where they go in, it's basically what happened to a lot of companies like Toys R Us and Sears. And
we call them an LBO then.
Yeah, a leveraged buyout. A bust out is essentially then when that goes to extend all the lines of credit, use up all of the money, pay yourself big bonuses, and then set the place on fire. It's a mafia term, actually.
Yeah. All right.
So, but it became adopted in the financial world for that practice. So basically, I was wondering, I was listening to your conversation with David Icke, and this sort of all sort of to digest it this morning. I was wondering if you think that there's a possibility that we are watching a bust out of the modern economy by the global, like, I don't know what you want to call them, establishment class, elite, whatever. Like, are we watching them take as much profit as they can out of a dying system and preparing to just sort of run away because, you know, they all that's happened during the pandemic, in my mind, is the rich have become richer and the poor have become poorer. Like, that's the biggest effect for me, that I see overall. And I was just thinking about this morning. So yeah, do you think that's a crazy idea?
No, it's not crazy at all. So, I mean, there's so many threads to this. The first is that if you look at how Western countries have treated third world countries, it's very well documented. You read things like An Economic Hitman by John Perkins or Disaster Capitalism by Klein. If you understand that there was a model out there, the shock doctrine, right, by Naomi Wolf, which says you go
Naomi
in.
Klein. Naomi Wolf wrote The Beautiful Mind, I think.
Naomi Klein, right? What did I say?
Naomi
Anyway,
Wolf.
thank you. Yeah.
I just remember because
right.
you're like, I've heard several people make this mistake, and I'm listening to shows and they're talking about, I'm like, give Naomi Klein credit because I want to marry her.
Naomi
brain.
Klein, yes, and I even know her, so I should know this better. But you're right. I get my Naomi's mixed up apparently. So the model is you go in and you shock a country, and then you strip mine its resources, right? And it's a very complicated process. I think that what we're experiencing is that we are at the end of the easy resources for the globe. There's no fat, happy countries out there that you can go and strip mine anymore. So what do you do when your model no longer has the fat returns from going out and beating up on a third world country? I think we're seeing the model just turned inward. It's come home. And so maybe we should have been more critical of it when it was being used to disadvantage brown-skinned people. But I think this is what it feels like to live in a place where the shock doctrine is being run on yourself, right? It's confusing. Nobody quite knows up from down. Your rights seem to just be turned into privileges that get stripped away. The money just isn't there for you. The government tries to do handouts to keep you mollified for a while. It's loaves of bread in Egypt, but it's, universal basic income in the US. It's the dole wherever you happen to live. It's the model. So I think that's what we're seeing right now is we're feeling what it feels like when this model gets turned against yourself. But ultimately it's kind of like that old statement, which is the last official act of any government is to loot the treasury, right? This feels like the sort of final stages of this big giant period of expansion we had. It started to stall. They tried to keep it going by ramming interest rates to zero and keeping the currency exploding outward. But when you look at the real economy, which is driven by real things, oil and water and silver and copper, when you look at the growth in those things, they're not growing like they used to. They've stalled out. And that stalling process is a once in a species thing, right? Our species is not going to be around long enough to see copper deposits reformed or oil reformed. Those are 100 million year processes, right?